We'll review 10 of the best stocks in this video that will increase your wealth and make you richer in 2023. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. Investors will probably remember 2022 as one of the most difficult and challenging years in history. All three of the most popular stock market indexes, the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite, are based on growth stocks and have fallen by between 22% and 38% at their worst points. Many people find that big drops in the market can make them feel bad and test their resolve to stay invested. But history is quite clear that putting money to work during bear market declines is a smart move. Every important correction and bear market in history has been left in the dust by a bull market rally at some point. This means 2023 could represent a new beginning for long-term investors, and all the more reason to go shopping. Let's review our 10 top stocks to boost your wealth and make you richer in 2023. Number 1. Meta Platforms, ticker Meta. First up is the world's leading social media stock Meta. Despite having a miserable year, the concerns about Meta's revenue and spending on the metaverse appear overblown, which sets the company up nicely for a solid bounce in 2023. Meta is the parent company of Facebook, Instagram, WhatsApp, and Facebook Messenger, four of the most popular social media sites in the world. By the end of October 2022, 3.65 billion people worldwide will have visited at least one of these sites each month. That's more than half the world's adult population. Even though the economy has been bad at home and abroad, the number of monthly active users on Meta has continued to grow. Advertisers are well aware that there's no platform on the planet that gives them a better chance to reach audiences with their message than Meta-owned assets. The other thing to consider is that Meta has the liberty to spend aggressively on the metaverse, thanks to the $40.5 billion in cash equivalents, and marketable securities on its balance sheet, as well as the $58.5 billion in operating cash flow over the trailing 12-month period. Meta wants to set itself up as a key entry point to the metaverse, which could be worth a lot of money. In summary, this is a company that has a lot of cash reserves that can easily spend on high-growth projects while still making a lot of money. Number 2. Enterprise Products Partners, ticker EPDA. Second top stock that can make you richer in 2023 is an oil and gas company, Enterprise Products Partners. Enterprise pays a massive dividend yield of 7.5%, and it has boosted its base annual payout for 24 consecutive years. While some of you might be worried about investing in oil stocks, as chatter about a US recession swirls, Enterprise Products Partners can sidestep these concerns. Enterprise is a midstream operator and controls more than 50,000 miles of transmission pipeline and 24 natural gas processing facilities, and can store 14 billion cubic feet of natural gas. Midstream operators lean on a fixed fee or volume-based contracts, which makes their operating cash flow predictable, no matter how volatile oil and natural gas spot prices are. Additionally, the global energy complex was broken or at least impaired during the recession. Capital investments dropped by a lot, and Russia's invasion of Ukraine has made it harder for some parts of Europe to get oil and gas. With no immediate global supply fix, energy commodity prices should remain above average. This is good news for midstream operators like Enterprise Products Partners, because it is likely to increase domestic drilling. Number 3. MasterCard, ticker MA. Payment processor MasterCard is another rock-solid stock that has a good chance to make investors richer in 2023. For most companies, historically high inflation is a headwind, but for a company like MasterCard, whose business is based on fees generated from payments put on credit cards, inflation can be a tailwind. No amount of inflation will deter consumers from purchasing basic necessities, and people may use credit cards more often in the near future if prices keep going up. The fact that MasterCard is careful with its money is a second reason to think that shares will go up in 2023. after a rough year in 2022. Even though the company would probably do well as a lender, the people in charge decided to only do payment processing. By choosing to avoid lending, MasterCard doesn't have to worry about setting aside capital to cover loan losses. MasterCard's profit margin is well above 40%. Number 4. Berkshire Hathaway, tickers BRK.A and BRK.B. Billionaire Warren Buffett isn't infallible, but he's been virtually unstoppable over long periods of time. As CEO of conglomerate Berkshire Hathaway for 57 years, Buffett has overseen a 20.1% annual average return for his company's Class A shares. That type of track record certainly makes Berkshire an attractive holding for 2023. The Oracle of Omaha's success has to do with two key aspects of Berkshire's investment portfolio. First of all, it is stacked with cyclical stocks or companies whose fortunes fluctuate in line with the state of the American economy. Even though recessions are unavoidable, Buffett is smart enough to know that times of growth last much longer. He's positioned Berkshire Hathaway to take advantage of these long-running bull markets. The second factor helping Berkshire Hathaway is Buffett's love of dividend stocks. Over the coming 12 months, Buffett's company should collect nearly $6 billion in dividend income. Dividend stocks are almost always profitable and time-tested. Better yet, they have a history of substantially outperforming companies that don't offer a dividend, which is what makes them a smart hold for patient investors. Number 5. NextEra Energy, ticker NE. NextEra Energy, an electric utility stock, is the fifth best stock for those looking to get richer in 2023. When dividends are taken into account, the company has given its shareholders a positive total return in 19 of the past 20 years. The great thing about utility stocks is the predictability of their operating models. Customers don't tend to change their electricity consumption habits much from one year to the next. This allows the company to accurately predict its annual cash flow, enabling it to invest in new projects, acquisitions, and dividends without hurting its profits. What really sets NextEra Energy apart from other electric utility stocks is its focus on green energy projects. It is the leading electric utility in the country in terms of generating capacity from wind and solar power. With oil and natural gas prices well above average, the cost savings of leaning on renewable energy stands out. Unlike other utilities, which are slow-growing, NextEra Energy is likely to experience a high single-digit earnings growth rate due to its green energy focus. Number 6. United Health Group, ticker UNH. The healthcare giant United Health Group has been a reliable investment for its shareholders, producing 18 positive returns over the past 2 decades. The company's insurance operations play a major role in its success, as they generate predictable cash flow as a result of inevitable catastrophe events. United Health is able to pass on higher premiums to individuals and businesses that hold policies, which helps to ensure its long-term outperformance. Optum, the company's health care services subsidiary, is also a major contributor to its success. Optum offers a wide range of services, including software utilized by healthcare organizations and prescription refills for hospitals, and is growing organically faster than the insurance segment, with a higher operating margin. Number 7. PayPal Holdings, ticker PYPL. PayPal enables digital and mobile payments for both consumers and merchants worldwide, with its namesake platform, Venmo, and more. The fintech company recently announced a strategic partnership with tech giant Apple, allowing its merchants and consumers to use Apple Pay at checkout in various ways. Despite the current economic hardship, PayPal's key performance indicators remain impressive. By the end of 2020, the average active PayPal account holder completed almost 41 transactions on a trailing 12-month basis. However, this number has increased to close to 49 transactions as of the end of June 2022, indicating that users are becoming more engaged. This is good news for PayPal, as most of its income comes from transactions. Additionally, the company is taking steps to reduce its annual operating expenses by at least $1.3 billion in 2023. As well as a $15 billion share buyback program. Taking this into consideration, PayPal looks like a great deal at less than 22 times Wall Street's forecast earnings next year. Number 8. Chevron Corporation, ticker CVX. For those looking to invest, Chevron Corporation is one of the best American stocks to buy for 2023. In October of 2022, the company reported Q3 results that exceeded analyst expectations, with $12.3 billion in free cash flow and total revenue of $66.64 billion, a 49.0% year-over-year increase. Charles Rahe, a Cowen analyst, raised his price target on Chevron Corporation to $185 from $160, while keeping an outperform rating on the shares. Rahe noted that Chevron Corporation had guided their 2023 capital investments to the high end of the midterm range, while their 2022 Permian growth was guided to the low end. He also reaffirmed their disciplined approach to M&A and share repurchases, despite an ever-improving balance sheet. Number 9. NVIDIA Corporation, ticker NVDA. NVDA stock is a great choice for investors who are looking for a reliable semiconductor company. It is one of the leading American semiconductor firms, and its A800 chip is the first of its kind to comply with the new U.S. export rules. Furthermore, Needham Investment Advisory, a trusted source for investment advice, recently issued a buy recommendation for NVIDIA Corporation and lowered their price target to $155 from $170. Investing in NVDA stock may be a wise decision for those looking for a strong and reliable semiconductor stock. Number 10. JP Morgan Chase & Company, ticker JPM. JP Morgan Chase & Company, a New York-based financial services provider, operates through 4 segments: consumer and community banking, corporate and investment banking, commercial banking, and asset and wealth management. On October 14, the company posted a Q3 GAAP EPS of $3.12 and revenue of $32.72 billion, beating Wall Street estimates by 23 cents and $840 million respectively. On October 17, 2022, Citi analyst Keith Horowitz reiterated a buy rating on JP Morgan Chase, with a $135 price target. Following the company's Q3 results, the analyst stated that the bank is hitting on all cylinders and that current share levels offer an excellent entry point for a quality franchise. According to Insider Monkey's data, 104 hedge funds were bullish on JP Morgan Chase & Company at the end of Q2 2022. Compared to 110 funds in the previous quarter. JP Morgan Chase & Company is one of the best American stocks to buy for 2023, according to elite investors. Which stock do you think should be in your investment portfolio in 2023? Let us know in the comments below, and don't forget to like this video and subscribe to our channel for weekly updates on the best stocks to buy, cutting-edge investment strategies for building wealth. Thanks for watching and happy investing.